Focus. Ideate. Innovate. Enable. ICICI Lombard and CNBC-TV18 present India Risk Management Awards, honoring the new age risk management practitioners.
The past few years have made risk the new normal. First the pandemic, then the war, Ukraine-Russia, and more recently, the banking and financial market tumbling have driven home the point that risk has become the new normal. Now, what we need to learn from is how to manage risk. One company that has been working hard to instill risk management in India, Inc., is actually ICICI Lombard. They have been collaborating with us, our channel CNBC-TV18, to host the India Risk Management Awards. Last year, over 500 companies put in their nominations for these awards. Today, I have with me Bhargav Dasgupta, Managing Director and CEO of ICICI Lombard General Insurance Company, to understand how he and his company understand risk and how they perceive risk management. What would they advise companies? Mr. Dasgupta, welcome to the show.
Thank you, Lata. Thank you for having me.
Actually, I don't know where to begin. So let me begin with geopolitics. The geopolitical fragmentation is now driving a geo-economic warfare. And that is coming down to companies because you don't know who will friendshore and who will onshore. So what are the recent shifts that you have seen or you would advise to mitigate and manage this risk?
If you look at the last 3 years, these have been extraordinary events. Each of these, start with the pandemic. That was a Six Sigma event, right? None of us anticipated that. Thereafter, we had lockdowns, right? And the global supply chain got disrupted. Another Six Sigma event none of us predicted. A war in Europe in today's day and time, I don't think anyone expected that to happen. The reaction of the West in terms of weaponizing a lot of aspects, again, probably not expected. And consequently, the inflation in food, fertilizer, oil, and then interest rate increases. And what we are now seeing, the impact of interest rate increases. Again, these are very, very rare events that is happening altogether. So what you said is absolutely right. The last 3 years, we've seen so many, outlier events from a risk perspective that have happened all one after the other. I think it's made everyone sit up and realize that risk management is really vital for your good health. Of course, there are opportunities that they're throwing up. You're talking about friendshoring, geopolitical uncertainty is definitely helping certain, segments of our industry. All of us talk about China Plus One strategy, sectors that are benefiting from that. But I think overall, there is a lot more realization that management has to be a lot more proactive and holistic about thinking about risk. So what we are seeing now is a lot more awareness, lot of thought, a lot of consideration, and as I said, a lot more proactive identification of risk. Of course, interest in insurance is increased. People are worrying a lot more about reputation risk, credit risk because of pandemic. These are things that people didn't talk about. What is happening in terms of warfare, cyber warfare? Is there something that they can do to protect themselves? Terrorism, political, risk. So these are things that we are seeing, which, of course, all of this was available, but it wasn't discussed at the level that we are seeing getting discussed today.
Instead of just geopolitics, let's look at climate risk. That is well studied, but the recent events in Syria and Turkey have brought home the point that it can be extremely difficult for companies to manage that kind of risk. Now, what's your outlook on hedging or insuring against these kinds of climate risks?
Again, this is a well-studied area, and people have been talking about for some time. But it's in spite of all of that, it's almost impossible to predict what will happen when. We are all realizing post facto the fact that climate change is driving a lot of catastrophes, but that's all post facto. We can't predict what is going to happen before. So if you look at the basic principles of disaster management, we talk about 3 R's, right? We talk about readiness, which is basically the preparedness for handling an event. Second is responsiveness. if an event happens, how do you respond to it? And third is relief, reconstruction, recovery, whatever you call it. Now, if you look at, let's take Turkey, such an unfortunate event. In terms of preparedness, I think at least, and you saw Turkey and Syria, and very different pictures across the two countries. If you look at preparedness, Turkey was, to the extent possible, they tried to prepare.
Yes.
To the extent that they said they have a law now, they have had a law for some time where every building within the municipal limits have to have a catastrophic insurance protection.
Okay.
So if you look at the total economic losses in Turkey, about $25 billion, but the insured loss was upwards of 20%, about 25%, which is reasonably good. You'll never get 100% recovery from, you'll not have insurance covering every risk, but at least 20-25% of the risk is covered. The thought process of Turkey even before was to create a catastrophic insurance pool. And again, most of the pool exposure is reinsured with the global in the global markets. So when an event of this nature happens, of course, there's such an unfortunate human loss and everything else that happens. But how do you ensure that you have enough capital to recover? And I think global reinsurance market will play an important role in that process. But if you look at India, I think there is a lot of work that we need to do in terms of the preparedness. The first R. I think on response, we've demonstrated. I think the Indian NDRF team was the first team to land up this.
Yes,
so I think we've done a lot of work in terms of preparedness as a country, and we've seen the response in the times of, like, let's say, cyclones. I think the NDRF team is doing a great job. But on the first, in terms of preparedness, and the third, in terms of recovery, I think we have a lot to do. In the first, start with some of the flooding events that we see in India. I mean, there's significant amount of work that we need to do in terms of urban planning, in terms of building resilient infrastructure.
Absolutely.
Which we don't do in our country.
But in that context, do you think property insurance should be made mandatory?
That's a fraud debate, and personally, it's never popular to talk about mandating something.
Okay.
As I said, I give the example of Turkey, and you see the recovery of Turkey vis-a-vis Syria. You'll see the compulsory insurance that they had mandated is going to help them. But in India, I don't know if we can make it mandatory, but we can definitely sweeten, and rather than a stick, we can definitely come up with carrots.
Okay.
We could definitely say that if you have an insurance, your home loan charges will come down. Banks could be given capital relief if there's an insurance policy attached with the home loan, for good reason, because your risk is coming down, right?
Yes.
Similarly, maybe there could be some kind of incentives given in terms of property registration, etc. Ideally, in the high risk areas, a mandate makes sense. But in across the country, maybe some of these positive incentives is a better way.
Okay. Yeah, fair enough. Now I'm coming to the question which I think is way too ubiquitous: cyber risk. I mean, we are very proud of our digital efforts, but even as it spreads to the lowest common denominator, it has put everyone, including the most sophisticated organizations, under risk. Do you all sell policies, or is this more a risk management conversation you have with companies? What would you advise?
Lata, what is amazing to see, we've had these policies for some time, cyber insurance, and maybe 3-4 years back, we were trying to convince people about the importance of cyber. I remember in one of our discussions, maybe 4-5 years back, we made a point that maybe financial services or IT sector, some of them were conscious of this risk, but the other sectors were not. And today, the situation is completely reversed. So at that time, we were marketing it. Now, we are having to deal with a demand which we can't supply to, because the exposure is something very large, and even for us, this is a bit of an unknown risk. So there is a tremendous change in attitude towards cyber risk for obvious reasons. I mean, all of us have seen some of the events that has happened.
Yes.
And I think all of us realize that there is, nation state activity that is happening in this. So there is concerted effort. I mean, data shows that India is mostly either the first or the second most targeted country from external cyber attacks. And then we have the internal, players as well who we are kind of really aware of. So this is something which is a massive, challenge for both the insured and as also the insurers and the reinsurers, because these are exposures which are which are very large and a bit unknown. So we, to the extent that is we are practically feasible, we are providing support. But honestly speaking, entities have to be really prepared and geared up to deal with this. I mean, in terms of the policies, in terms of their multiple level of protection that they do, in terms of response, preparedness for response, in terms of acculturation. You have to do a lot of work in terms of employee awareness. And one of the things that we do at ICICI Lombard is not only do we provide cyber insurance, but we do a lot of work in terms of guiding people and supporting people in some of these areas.
Have you noticed I haven't even started on health insurance? Really, we have put some space between us and COVID. But I will have to ask you questions on health insurance. A quick break and we are back with more.
ICICI Lombard and CNBC-TV18 present India Risk Management Awards, honoring the new age risk management practitioners. ICICI Lombard and CNBC-TV18 present India Risk Management Awards, honoring the new age risk management practitioners.
Welcome back to the curtain raiser episode of the ICICI Lombard CNBC TV18 India Risk Management Awards series. I've been speaking to Mr. Bhargav Dasgupta, Managing Director and CEO of ICICI Lombard. Mr. Dasgupta, before we went to the break, I wanted to ask you about health and wellness. Now, first, as a company and as an industry, what new initiatives have you all taken since the pandemic hit us, in both retail and corporate?
I think there are multiple initiatives that the industry took during the COVID period. And I'm not going to those specifically because that's in the past. But suffice it to say that this was completely, obviously unanticipated. And none of us priced this into our products. But the industry paid roughly about 25 to 30,000 crores of claims. That was unanticipated. But what it has done is it has also, in our mind, changed the outlook of, customers, insurers, policymakers, towards the whole approach of health. At a customer level, obviously, the awareness and the realization that, health is important, health insurance is important. But secondly, adequacy of cover, which is a conversation that you rarely had. I mean, it was a kind of a checkbox saying that, okay, I have a 3 lakh cover from my company, that's good enough. Now people are realizing that that's not enough if you really need, to be treated when there's an emergency. Secondly, if you look at most of the, the good corporates, they're realizing that it is not just price, but it is about the service, who you partner with, and what other value do they provide to you. So one of the changes that we are seeing is that a lot of healthcare is now getting digitized. So if you look at the telehealth services, I mean, there's a 30x increase in the number of, teleconsultation that is happening in the country. We, as a company, we launched some of these services on a digital platform, and we had launched it just before COVID, coincidentally, but it ramped up thereafter. But increasingly, we are seeing, companies seeking some of these other capabilities to look at a more, comprehensive care module rather than just sickness insurance and go to the hospital. The other change that we are seeing is the mental healthness issues. And, on our app, for example, if you have outpatient covers, which is also becoming very popular, as I said, earlier it was just a hospitalization cover. Now people are seeking, outpatient cover and the entire wellness piece. But if you have outpatient cover, we also give you, completely anonymous support in terms of mental, well-being, counseling, etc. It's a service available to our employees within our organization, and we offer it to our clients. And we are seeing tremendous, acceptance of the need for, and not only the awareness but acceptance, and that's a word that I want to stress. And in a sense, the stigma is going away, which is a positive development. So I think there's a lot of change. To me, the whole journey for health now will be the continuum of care, personalized, solution for the individual, as much of digitization as possible, where you can, consume some of these services. Everything obviously cannot be, remote, but whatever can be consumed in a remote manner, people will consume that. and you have to gear up for that.
Fair enough.
And I think in that context, we are very excited about the health stack that the government is building. If we can implement it at scale in this country, I understand the constraints because of health being a state subject.
Yeah.
But if we can implement it across this country, it will completely transform the healthcare sector for us.
Okay, speaking of problem of plenty, what occurred to me was also a problem of paucity. Actuaries, I mean, the numbers have not at all increased in keeping with the scale and pace at which the insurance industry has expanded. Your thoughts?
No, you've picked up a very, very important issue, which is not really talked about or even understood at that level. I think we have a genuine, constraint in terms of number of actuaries and certified actuaries, fellow actuaries who can sign certify your products or your reserves, etc. There is a genuine challenge there. I think the actual society has been trying to promote and attract more people to come into the sector. What we are seeing is there's a lot of interest among the students of mathematics, statistics to come into the sector. I think so. We are, for example, one of the things that we do as a company is we go to some of the IITs and ISIs and attract people. We have a pretty large actuarial department, almost 40 people, which is if you look at most players in this country, it will be very, very significant. But it's not enough. I mean, we don't have enough for all the companies in this industry. So we need to have more. I think where the gap is not is in terms of attracting people to come in.
Yes.
But what is the gap is in terms of not having number of experienced actuaries at a time when the market is opening up and getting liberalized. And I think companies have to invest in adding more people, and give them. They may not be, certifying actuaries or appointed actuaries, but you at least groom a cadre of people who, in due course, will become that. The other thing that we could consider as a country is mutual recognition. India and UK are the only two countries which have mutual recognition to accept each other's actuaries.
Oh, I see.
At the same time, we see a huge reverse brain drain. Young actuaries moving out of India and going to Singapore and Hong Kong. I think it's a time for us to think about, signing mutual, recognition agreements with, let's say, US CAS, it's their non-life actual society, or with Singapore, or with Australia, or with Hong Kong, where the actual practices are very well developed. I think for the temporary period, we could address the shortage of the fellow actuaries and the associate actuaries.
What is your estimate of the India growth story? One would expect that it will be a long-term steady growth for insurance as more and more people, rise up the echelons. But people are also talking about the K-shaped recovery. Do you see that the pace of growth is not as rapid as you would have thought some time back?
I think there is clearly a mixed pattern of data that we are seeing. I mean, you see the luxury vehicle sales versus the two-wheeler sales in our sector. You see, large corporates. You see some of the SMEs. Clearly, there is two data sets that we are seeing, and with different patterns. And when we go out and talk to our customers, dealers, distributors, etc. Even at the rural end, while yes, right now the data doesn't look great, but we are still very optimistic that it's just poised for recovery. So we are very, very bullish about the India growth story.
Okay, just a couple of recent announcements that have come from the regulator and your thoughts on that. I was particularly struck by this file and use going away, and use and file. So you just launch your product and you become responsible if something goes awry. You think this will work well? It will make the industry more responsible?
Look, Lata, I think this is a change that the industry has been clamoring for the last probably 15 years, or if not 15 years, at least 10 years. And if you look at the stage of evolution of the industry, when it was opened up in 2000, maybe it was not the right time to think about these things. But after 10, 15 years, where a number of companies have got listed, scaled up and become mature, this had to happen and should have happened, maybe even earlier. So to that extent, it's very positive. I think the larger point that I see in terms of the regulatory mindset is a shift away, not only in this case, but over the entire spectrum, I'm seeing a shift away from a mindset of rule-based regulation to a principle-based regulation,
Yes.
which puts the onus back on the company to behave in a certain mature manner.
Yeah.
The big question is, will everyone behave maturely? Maybe, maybe not. We'll have to observe it. But you have to first trust the companies to behave in a sensible manner. If, however, anyone doesn't, I think what one would hope to see is a very differentiated response. Rather than throw the baby out with the bathwater,
Yeah.
companies which do not behave sensibly have to be hauled up and taken to task. That we have to see if that happens. We hope the regulator, does that,
Yeah.
because then this will sustain. Otherwise, one bad apple can spoil the whole, stock.
Limits of margins that you can provide as incentives, product wise, is likely to be replaced by a macro limit. Now, my fear is that maybe lucrative products will sell more because you are allowed to give higher incentives. Do you think there is a worry that some products may fall by the wayside, some sectors may fall by the wayside?
Honestly, Lata, I don't think so. Look, at the end of the day, all of us are wanting to grow. I mean, you have separate limits for 22 different lines of product with sub-limits for different expenses within that. I mean, you don't see it anywhere in the world.
No, you
I
don't.
mean, the kind of regulation that we've had. Even expense of management is an unusual regulation.
Absolutely.
Most of the world markets, you'll see a solvency regulation. You have a solvency, you manage your business, you have a problem in your combined or solvency, you bring in more capital. In India, at least we are not even going there.
Yes.
We are doing the first step on moving into one composite limit,
Yeah.
and let companies figure out where they want to focus on. And honestly speaking, as I said, all of us want to grow. The so-called attractive product may have some limit in terms of the opportunity size.
Absolutely.
So why would we not? So, for example, as a company, we are investing heavily into the tier 4 towns. Lot of investment for the longer term, but immediate response doesn't come in terms of business. But that's the investment for the future. We will do that.
Okay. Pleasure speaking with you, Mr. Bhargav Dasgupta. Thank you very much for joining us in this very special chat.
ICICI Lombard and CNBC-TV18 present India Risk Management Awards, honoring the new age risk management practitioners. Focus, ideate, innovate, enable.